Hello everyone. I hope you all are doing well and tell me in the chats how are you. And I'm on live for sharing my views on the treatment of bad debt under the UAE corporate tax. It is one of the very important provision and you should all know because the bad debts is one of the expenses which happens in every company. So let us know that first we should know the UAE about UAE corporate tax. Recently in the year 2023 in the month of June, from the starting of the month of June in the UAE, the UAE corporate tax has been introduced and it is applicable on the every company incorporated in the UAE and those company which are having a nexus or the permanent establishment or a state sourced income in the UAE. So this is about UAE corporate tax. Let us know about bad debts. Bad debts, what is bad debts? First we need to understand that what is bad debts. Bad debts like there is a company A. It makes a sales to company B and to promise that the company will make a payment in next 6 months. Okay, so on 31st, let's suppose on 31st December that company has not made payment. Company B has not made payment to company A. So on 31st December, A will will estimate that whether the company B will make payment after 31st December or not. Suppose on analysis the company A come to conclusion that company B there is a less probability that company B will make payment to company A. So there is more chance that the company A will lose the money which he has to receive. It has to receive from company B. So then because he has booked those amount as sales, then that means this income has increased by that amount. But actually they will not receive the money from company B. So it should reduce its income. So how will how will this be done? So now this company will book a bad debt. It will pass expense entry for bad debts like bad debt expense account debit to provision for bad debt. So bad debt expense will go to P&L debit side and it will reduce the income by the amount it income was increased by those sales amount. And in further way in balance sheet, its debtor will be decreased by the amount provision for bad debts. So now, while filing the corporate tax return, so whether this expense which has been booked as bad debt, whether it is be allowed while calculating the taxable income. So there are provisions which there are some provision written in the corporate tax guide of the UA corporate tax law, and which says it's like that. Every provision is allowed as expense under UA corporate tax law, except this provision relates to those kind of expenses which is not allowed as deduction. Like which are those expenses? Like entertainment expenditure, penalty, bribes. These expenses can't be claimed as expense under UAE corporate tax law. So if provision relates to these kind of expenses, then that provision will not be allowed as expense. But what about bad debts? Bad debt is a deductible expenditure. If in reality bad debt has happened, some company has said that I'll not pay, then that is allowed as expense. So even the provision related to bad debt is allowed as expense. So on 31st December, the provision made by the company A will be allowed as expense. So its accounting income and taxable income will remain same. The income will not increase by adding that bad expense because the bad expense is allowable expenses. So let me know in the comments if you need to understand on this. This was all. I explained it, and I will attach the corporate tax guide as well on this provision, from which it will give more clarity to you. So if anything you need to know further, you can write in the comment. I will reply there. Thank you.